This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say to buy as much as possible before December 9th. The company is Nextracker, ticker symbol NXT. They're a solar panel company. The panels track the sun. They had almost $1 billion of revenue, up 40% year over year. There's another company that had revenue up 40% year over year, a little bit less revenue, 150 million. Company is Lemonade, ticker symbol LMND. They do insurance technology, which is a fancy way of saying they pay for advertising and then they have an automation that you could probably set up honestly yourself, maybe not quite as good as theirs, to send people who click on the ad to a page that tells them to call an insurance company or, enter their email for a quote or whatever. So anyway, let's jump into a little breakdown right now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so here is a Nextracker. This is the company that is doing well in the solar sector. And seeing as my entire computer just crashed in the middle of a live stream, I guess it's no surprise that I have to open up every single program in order to show you guys the charts and all that again. So anyway, Windows 11 is horrible. This is a lot of money, almost $1 billion, up 40% year over year. And they have this backlog of $5 billion, which is up 10% year over year as well. They did increase their guidance, and everything seems exciting. This is, of course, true. Solar is rate cut sensitive, but so is basically the entire economy. All these build outs are basically real estate build outs for the data centers. So those are rate cut sensitive. The Fed is talking about, maybe this month there will be a rate cut, but there's no new information. So that's really all that matters. It's not about let's tell you all the information, let's learn all the information. Is there new information and what companies are going to be helped or hurt by that? That's what a market is, right? Someone in the comments can, talk down on me for simplifying it like that, but that's pretty much how I see it. So anyway, now that we've got charts up, that's going to be helpful. This is a chart of Nextracker, and basically we've gone sideways for a couple months. In general, this earnings reaction was solid, but what's important is we're coming down to this 83 line and holding it. And it really coincides with the start of earnings. So everything seems strong. As the market came down, this came down a little bit, but it never broke that flag. So maybe we're getting a little bit of a discount as the market's ripped. Nextracker's gone sideways. It does never hurt to look at the TAN solar ETF, which seems to be shaping up. FSLR looks okay. It looks good. Array is another one that's holding up. It's not really been a super strong one. It never really moved up or went like those other companies. But you'd think PV would be a solar company, but something's going on with that ticker, so I guess not. Anyway, Nextracker seems like the one to look at. So I do think that as far back as August, August and September was the biggest run for all these companies. You have to accept that we might not get a run like that for a couple months. And all I'm really trying to come out with here is what are the risk levels for this company, and where can you expect it to go? So I think this shelf of 90, you could just call it 90, is a pretty good solid risk level. So risk $1, look for 10 has to be the move. So, maybe what exactly are you risking? I don't know. This open back here, maybe you can buy over 91 and change. But just find something that speaks to you and stick with it. Otherwise, it's going to be hard to it's hard to get situated in this company when it's not building a flag, and it hasn't gone up when the market's gone up recently. So just something to be aware of. And then for this other company, I do think Path, what am I talking about? Path, Lemonade. I just talked about Path. This flag looks awesome. It really does. This moving average is a good place to buy it off of, 73. And then over 80 is definitely interesting as well. So if you can find a spot in one of those places, that's probably a good place to buy it. It's definitely shaping up well. It has that characteristic of big move, sideways, whatever, big move, sideways, big move, sideways, big move. And this might not look big. This is pretty big. This is 50% in, a couple weeks. So I know it's an $80 stock. These are both early stocks. But they definitely look like they're ready to go. So check that out as well. Now, as far as what these companies are up to, solar and energy, like I mentioned, sensitive to rate cuts, but the whole market's sensitive to rate cuts. So I pretty much just try not to focus on that too much. And then there's a lot of companies that are similar that I mentioned. And then yes, I want all the companies. As far as Lemonade, there really aren't that many similar companies that are publicly traded, because it's kind of unusual to have, a little marketing automation company to go public, and they are unprofitable, and maybe that's why. I mean, Root does auto insurance. Lemonade covers the other one. I haven't heard of Root. I'm sort of expecting to hear of some of these companies. Root, KMPR. I don't think this looks interesting at all. KMPR looks terrible. And what was the other one? LMKR? PLMR? PLMR looks pretty gnarly as well. So I would just ignore these. Lemonade's kind of in a league of its own for sure. I mean, just looking at the chart. I think the investors are significant too. So keep an eye on that. This is property and casualty insurance. People love these stocks for the long term. I'm not saying to buy this for the long term, but they are in the biggest market in the I guess the East, whatever, Europe, Germany, and they do rental insurance as well. So this is behavioral economics. Like, yeah, right. Like they make pictures of, get car insurance for $20 or whatever. It's not that crazy, but they are sending customers to the right, routing them to the right insurance company, making the most money. I don't really get how they're going to replace brokers. But I guess I do. I mean, I've filled out, actually, I definitely get it. I've gotten insurance online without talking to anyone. And I guess if you don't talk to anyone, why do you need anyone to sign off on it? Don't quote me on that. I'm not in insurance. But anyway, they've got this B Corp certification. And that's kind of just a badge of honor or, lack of focus, depending on who you're talking to. But anyway, the chart itself looks to be shaping up really well. And it's hard to find something like this right now, which makes sense given, this is what the NASDAQ has done over the past 2 weeks. So yeah, sure, there's maybe kind of a flag going here, but, not really. We've just gone up a ton, and it wasn't really expected that we would keep pumping, but markets go up. So that is Lemonade. As far as companies that are similar, just to give the full picture here, outside of those, this is what they do. I don't know what telematics is. Some of these words that come out of ChatGPT. They run ads. And then Hippo is, I have heard of Hippos actually. HIPO. It would be great to find one more. Yeah, this doesn't look great either. One more company that's liquid. It's not very liquid either. That we can look at as sort of a sympathy or a laggard to Lemonade, just to see how the sector's doing. But the challenge is Allstate and Progressive are so big, and they're kind of the client. So not only do they move slowly 1%, but 2%, they also are very choppy. And it's kind of like saying, how is Iron doing based on Google? Google has a partnership with Iron, or Iron has a partnership with Google. It's like, well, Google's doing great, and Iron is not right now, right? So it's not really the best way to get insight into how a company's doing. But it's better than nothing, to at least be aware of those. I think these are just smaller companies. I have heard of Erie, but I think in general we can just not lean into that too much. Solar is different. Solar, these companies definitely do run together. And I know there's a few more besides First Solar, FSLR, besides Nextracker, besides Array. FTCI might be on that list. Let's take a look at that. FTCI. Yeah, this one is very liquid. But definitely shows the growth of these solar tracking companies. And then the TAN ETF is probably the best one. Oh, here we go. Enphase and Sunrun is what I was looking for. So let's look at that. Enphase, I don't think has been doing great at all. Sunrun had a huge run in 2021. Starting to shape up a little bit, but there's not really any oomph in these charts. So it's just down since 2021, and then it's fine, but you can't really buy it when it just has gone sideways since August. And it's not really, there's some companies that built out bases that really look favorable. If you look at Amgen, this is a base that looks interesting. Or, if we look at a massive type of base, if we're trying to find bases since August, this is sort of a base for ExxonMobil. It's channeling up, but in general, this is rough. If it only went up, it only went up. It's a $5 stock and it went to 20. It went up a lot. But I don't know. This doesn't really speak to me. I guess it's just hard when you're dealing with $5 to $10, $20 tickers like open as your competition, which went up 1,000%. So it's not always about the percent. It's also about the actual price of the stock. And this one, it's kind of in no man's land. So I think FSLR is the best peer. NXT, probably a little bit more favorable to buy risk reward wise right now. It's hard to, and this is a little counterintuitive, but even though FSLR is doing better, it's a little hard to position, in my opinion. Maybe because, this left side peak is down here at 245, which is not a lot percent-wise, but it's, 3%. And NXT, if you really, really zone in here, you could risk maybe 1% or so off of, one of these highs about a week ago. So that's the opportunity. Lemonade, as far as risk, you could probably risk here, which is like a lot. It's like 5% off of, about 70, or really more reasonably, you'd want to buy it over 79. So those are the ideas. Computer just crashed, so sorry for being all over the place. If you like these ideas, though, and getting them in the future, hit that like button for the YouTube algorithm. If you want a free course on how to find the next NVIDIA without gambling on startups, it's 30 minutes. Hit that subscribe. You'll get that in the YouTube posts section. I post that once a month for subscribers. And if you want the best idea of the day, head over to stockscommunity.com. You can sign up for that 7-day trial. Give it a shot. The testimonials are pretty good.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.